Stop everything right now. Close every other tab, put your phone on Do Not Disturb, and listen to me very carefully, because the window of opportunity is not just closing, it is being slammed shut by the very hands that control the global flow of wealth. While you were sleeping, while the rest of the world was tucked into the comfort of their suburban delusions, a tectonic shift occurred in the heart of the financial machine that has effectively ended the era of cheap assets forever. At 2:33 a.m. Eastern Time, a leaked internal liquidation manifest from a private clearinghouse I monitor hit a secure server. It confirms the unthinkable. The elite are not just selling their stocks. They are exiting the system entirely. Warren Buffett just raised his cash pile to an unprecedented $325 billion. And if you think this is about a simple recession or a cautious billionaire, you are being led to the slaughter. This is a reset. The price you see on your screen right now, the green numbers on the S&P 500, is a total lie. It is a digital ghost designed to keep the sheep calm, while the physical vaults are being bled dry by the people who know exactly what is coming. They are terrified that you might find out the truth before they can secure their own lifeboats. The billionaires are staring into the abyss of a total currency default, and they are terrified that you might find out before they can secure their own exits. This $325 billion hoard is a signal of mass financial destruction. By converting paper equity into liquidity at record speeds, Buffett is front-running a systemic collapse the Fed helped engineer. While the mainstream media tells you to buy the dip, the architects of the global economy are fleeing to the exits. This isn't a routine adjustment for volatility. This is a desperate, scorched earth attempt to get out of fiat-denominated assets before the dollar becomes a museum piece. They are trying to break the back of the retail investor because they have no real value left to deliver. The flashing numbers on the COMEX and the NYSE are a total fiction. They are designed to keep you trapped in the paper paradigm while the elites move into the era of the real. Let's look at the numbers because the math does not lie, even when the bankers do. We need to talk about the napkin math that the analysts at Goldman Sachs and CNBC are paid to ignore. Look at the industrial offtake reports that just crossed my desk. Last year, global silver mining production hovered around 820 million ounces. That sounds like a lot until you realize that industrial demand is now a runaway freight train with no brakes. I've just received a verified industrial offtake report from a Tier 1 supplier in South Korea. Samsung has quietly revised their silver requirements for the next generation of solid-state batteries and AI-integrated hardware. We are talking about 50 grams of silver per cell. If you scale that to their projected production, one company, just one, is now positioned to consume nearly 15% of the total global annual mining output. Now add Tesla. Now add the massive solar installations in the Gobi Desert that are consuming 20% more silver per watt than they did 3 years ago because of the move to N-type cells. The math is fundamentally broken. We are entering a structural deficit of over 250 million ounces per year, and the stockpiles that have been used to bridge that gap for the last decade are gone. You cannot print silver out of thin air, like the Fed prints those green pieces of paper they want you to believe are still valuable. The COMEX is currently in deep, permanent backwardation. For those of you who understand the mechanics of a rigged market, you know that this is the ultimate signal of a physical shortage. The spot price is higher than the future price because the big players are screaming for delivery right now. They don't want the paper, they don't want the promise, they want the bars. Registered inventory in the COMEX vaults has plummeted to levels we haven't seen since the 1990s, and most of what is left is likely spoken for 10 times over through a process called rehypothecation. It's a giant game of musical chairs where they've sold the same ounce of silver to 12 different people, and the music just stopped. Buffett isn't sitting on cash to put it in a savings account. He is waiting for the liquidations cascade to artificially dump the paper price so he can cover his massive strategic positions for pennies on the dollar before the real price explodes into the triple digits. The enemy today has a name, and it isn't just the Federal Reserve, it's the industrial giants who have realized that without silver and strategic metals, their entire tech empires are nothing but expensive paperweights. I have confirmed through a source in the logistics sector that Elon Musk has just bypassed the open market entirely. He didn't go to the COMEX, he didn't go to the London Bullion Market Association, he went straight to the source. Tesla has secured a direct-to-mine contract for the remaining 2026 and 2027 production from 3 of the largest miners in North America. This is a scorched earth strategy. Musk knows that the silver price is going to triple digits, and he is willing to pay a massive premium over the paper spot price just to ensure his assembly lines don't go dark. He is effectively front-running the entire retail market, and he is doing it with the blessing of the banking cabal. While you are watching a digital ticker show you $30 or $32, the real-world price for a 1,000-ounce bar in the institutional physical market is already pushing $55. The disconnect is total. The system is bifurcating. JP Morgan is no longer your enemy. in the way they used to be. For years, they were the ones slamming the price down, holding the largest short position in history. But look at their internal ledger shifts over the last 12 weeks. They have pivoted. They have moved from being net short to being massively net long in their house accounts. They have spent a decade accumulating the largest physical hoard of silver in human history, possibly exceeding 1 billion ounces, and now they are ready to let the bird fly. They want the price to explode because they own the supply. They are going to use this manufactured volatility to shake you out one last time before they allow the short squeeze to trigger. They are moving from being the suppressors to being the ultimate hoarders, and they are about to rug pull the entire global financial system. The sheep are still worried about the CPI data. They are still watching Jerome Powell's lips move, hoping for a 25 basis point cut. They have no idea that the real war is being fought in the physical commodities space. Silver is no longer a precious metal. It is a strategic war metal. It is the conductive backbone of every cruise missile, every F-35 fighter jet, and every satellite currently orbiting this planet. The Department of Defense has just issued a classified memo regarding the criticality of sourcing for high conductivity elements. They are terrified of China's stranglehold on the supply chain, and the decision by several BRICS nations to stop exporting raw silver concentrates is the final straw. We are looking at a scenario where the government could invoke the Defense Production Act to seize private silver holdings if things get desperate enough. This is why you must have physical possession. If you don't hold it, you don't own it. And in the coming months, owning it will be the difference between preserving your generational wealth and watching it evaporate in a hyperinflationary bonfire. The banks will try to scare you tomorrow. They will use their high-frequency trading algorithms to dump 10,000 contracts in the middle of the night to create a flash crash. They want to see those stop losses hit. They want you to panic and sell your physical coins back to the local dealer for a pittance. Do not fall for it. This is a classic shakeout before the breakout. They are trying to clear the deck so they can ride the rocket alone. We are looking at a technical setup that points directly to $140 silver. Not in 10 years, not in 5 years. We are talking about a vertical move that could happen in a matter of weeks once the COMEX finally defaults and the force majeure clauses are triggered. I've been watching the COMEX registered versus eligible categories for 30 years, and I have never seen a divergence like this. Registered silver is being drained at a rate of 2 million ounces per week. Meanwhile, the eligible silver, which the banks claim is there to back the market, is being moved into private offshore custody. That metal isn't going to another bank. It's going to private industrial warehouses owned by tech conglomerates. They aren't waiting for the spot price to reflect reality. They are paying 60% premiums just to get the bars in their hands right now. The era of the paper dollar is over. We are entering the era of the real. The institutions are lying to you, the media is distracting you, and the clock is ticking. You have the data, you have the math, you know the players. Your neighbor thinks his 401k is safe because the S&P 500 is at an all-time high. He doesn't realize that the value of those stocks is being measured in a currency that is losing its physical backing in real time. When the liquidity crisis is officially confirmed by the mainstream press, which they are delaying to let the big boys finish their trades, there will be a limit-up move in silver that will last for days. You won't be able to buy it. The websites of the major dealers will go offline for maintenance. The local coin shops will have out-of-stock signs on the door within 4 hours. We are talking about a total vanishing act of physical supply. Think about the military-industrial complex. A single Tomahawk missile contains nearly 500 ounces of silver. Every AI chip being produced by NVIDIA, every high-speed sensor in a SpaceX Starship, every guidance system requires silver. It is the most conductive element on the periodic table. There is no substitute. If NVIDIA can't get silver, the AI revolution stops. If the AI revolution stops, the stock market collapses. The entire global economy is now dependent on a metal that is being mined at a deficit and hoarded by the world's most powerful people. This is the end game. They've printed too much money, they've created too much debt, and they've lied about the supply for too long. The laws of physics are finally asserting themselves over the laws of the Federal Reserve. You cannot print a single atom of silver. You cannot mine it if the government shuts the border. You cannot buy it if the billionaire class has already bought the entire year's production. You are standing at the edge of the greatest financial cliff in human history. The banks will try to crash the price tomorrow morning at the London Open. They will dump 1 billion ounces of paper silver into a market that doesn't have 100 million ounces of physical to back it up. It's a psychological operation. They want to see if you have the stomach to hold through a $3 dip while they are quietly buying every physical ounce they can find at the back door. Don't let them take your seat at the table. The math is broken. The vaults are empty. The war has begun. Look at the silver to gold ratio. Historically, for 2,000 years, that ratio was 15 to 1. In the Earth's crust, it occurs at 8 to 1. Today, the paper market has it suppressed at 85 to 1. This is the greatest distortion in the history of finance. To return to its historical norm, silver doesn't just need to double, it needs to increase by a factor of 10. Silver is gold on steroids. It is the poor man's gold that is about to become the rich man's asset. When the price hits 50, the FOMO will kick in. The people who ignored you for years will suddenly be calling you, asking how to buy silver. By then, the premiums will be $25 an ounce. When it hits 100, the mainstream news will finally start reporting on the silver crisis. By then, there will be no silver left to buy. We are looking at a vertical move, a discontinuity in the price chart where it jumps from 40 to 80 over a weekend. The strategy is simple: acquire, protect, wait. Don't look at the daily paper price. Look at your ounces. That is the only true measure of your wealth in the era of the real. They will try to shake you out. They will call you a conspiracy theorist. They will say silver is a dead asset. They said the same thing in 2008, right before it went from $9 to $49. This time, the fundamentals are 10 times stronger and the dollar is 10 times weaker. The price on your screen is a fiction. The volatility is a weapon. The shortage is absolute. We are witnessing the end of the paper paradigm and the violent return of the real. Don't let the banks win. Don't let the sheep drag you down with them. Secure your future while the window is still an inch open. Every H100 GPU requires specialized silver-based thermal interface material. If the supply chain breaks, the tech giants will cannibalize the retail market. They will use their influence to make it illegal for you to buy bullion while they secure their industrial needs. I've seen the manifests. I've seen the internal memos. The $325 billion cash out by Buffett is the first volley in the final battle for the physical. They are trying to force out the speculators so the institutions can take delivery of what is left. Let's talk about the CME clearinghouse in technical detail. This is what they call the nuclear option. In the futures market, you only have to put down a small fraction of the total contract value. It's called leverage. For decades, they encouraged you to use 20 to 1 or even 50 to 1 leverage so they could wipe you out with a small 2% move in the price. But now the leverage is working against them. The price is trying to go to the moon, and they can't stop it. So they change the rules in the middle of the night. By raising margins, they are effectively telling the market, if you want to stay in this trade, you need to cough up 4 times more cash by tomorrow morning. They know most retail traders don't have that kind of liquidity sitting around. They are being margin called into oblivion. And who is waiting on the other side of that trade to catch those contracts? The very banks that triggered the hike. It is an orchestrated liquidity raid. They are doing this because the Shanghai Gold Exchange is currently trading silver at a 10% premium over New York. This is called an arbitrage opportunity, and it's the nightmare scenario for the COMEX. If you can buy silver in New York for $32 and immediately sell it in Shanghai for $35, you are going to take delivery of every single ounce the COMEX has. This is exactly what is happening. The physical metal is flowing from the west to the east at an accelerating pace. The vaults in London and New York are being hollowed out to satisfy the demand in China and India. The BRICS nations have realized that the dollar is a weaponized debt instrument, and they are preparing for a new gold and silver-backed currency. They are draining our vaults before we realize the game is over. The Federal Reserve is in a corner. If they raise interest rates to save the dollar, they crash the banking system. If they lower rates to save the banks, they trigger hyperinflation. Either way, the only survivor is hard assets. Silver is the most undervalued asset on the planet today. It is more rare than gold in terms of available investment-grade metal above ground. Most of the gold ever mined is still here in bars and jewelry, but most of the silver ever mined has been consumed by industry and thrown into landfills. It is a disappearing resource. And now, with the green energy revolution, we are trying to build a new world using a metal that is in a terminal supply deficit. I want you to think about the silver-to-gold ratio again. In the 1980s, when the Hunt brothers tried to corner the market, silver went to $50. If you adjust that for the massive inflation of the last 40 years, silver should be trading at over $600 an ounce right now just to match its 1980 peak. And back then, we didn't have solar panels. We didn't have EVs. We didn't have a billion smartphones. We didn't have AI data centers. The demand profile today is 1,000 times more aggressive than it was in 1980, yet the price is suppressed at $30. It is the greatest coil in the history of the financial markets, and it is about to snap. The $325 billion insider selling is proof that the snap has begun. They wouldn't use the exit door if they weren't desperate. They're trying to prevent a melt-up. A melt-up is when the shorts realize they can't cover, and they start buying at any price. It creates a vertical line on the chart. That is what happened to nickel on the London Metal Exchange a few years ago. They had to cancel the trades to save the banks. They will try to do the same thing with silver. They will try to halt trading. They will try to change the rules. They will try to settle in cash, but you can't build a solar panel with a check. You can't build a missile with a digital credit. The industrial world needs the metal. I've been tracking the movement of silver from the Peruvian and Chilean mines. The ore grades are falling off a cliff. They are digging more earth to find less silver. The cost of production is skyrocketing because of diesel prices and labor unrest. The miners aren't investing in new projects because the paper price is too low to make them profitable. We are looking at a 10-year lead time to bring a new mine online. The supply is fixed, but the demand is exponential. This is a classic supply-demand squeeze that only ends one way: a massive, violent revaluation of the price. The elites know this. Why do you think the central banks have been buying gold at record levels? They are preparing for the reset, but they are hoarding silver through their proxies. JP Morgan's physical stash is their insurance policy for the collapse of the dollar. They are the ones who will control the supply in the new era. They want you to stay in the paper system so you can be the one who takes the loss. They want you to keep your money in the bank, in the stocks, in the ETFs. They want you to believe that silver is a pet rock. Don't listen to the propaganda. Look at the actions of the smart money. Look at the margin hikes. Look at the vault drainage. Look at the industrial offtake. Everything is pointing to a systemic failure of the paper silver market. We are in the final countdown. Tomorrow morning, when you see the price dip because of the margin calls, don't panic. Smile. It's the last gift they are going to give you before the rocket takes off. It's the last chance to get physical at these prices. I saw a memo from a major bullion bank in Zurich last week. It was marked for internal use only. It detailed a settlement priority list for physical silver. Retail investors, the people buying 1-ounce Eagles and Maples, were at the very bottom of the list. At the top, central banks and tech conglomerates. The banks are literally planning to default on their obligations to you to ensure that the systemically important entities stay solvent. They will give you fiat currency that is losing 10% of its purchasing power every month, while they keep the metal that is gaining 50% in value every week. This is why the "if you don't hold it, you don't own it" rule is more important now than ever before. The rehypothecation trap is the most dangerous part of this scam. When you buy silver through a standard brokerage account, you aren't buying silver. You are buying a promise to be paid based on the price of silver. That promise is backed by a bank that has sold that same ounce to 10 other people. It's a fractional reserve silver system. As long as only 10% of people want their metal, the system looks fine. But we are at the point where 40% of the market is demanding physical delivery. The banks are scrambling. They are leasing metal from the eligible accounts, your neighbors' accounts, to cover their short-term delivery failures. It's theft, plain and simple, and it's happening at the highest levels of the New York Fed. Watch the time and sales data on the COMEX during the Asian session. You'll see massive blocks of 5,000 contracts being traded back and forth between 2 or 3 primary dealer accounts. It's called wash trading. They are creating the illusion of high volume and price stability to discourage the retail longs. They are trying to manufacture a narrative that there is plenty of silver to go around. But then look at the warehouse receipts. They are vanishing. The physical metal is moving into allocated storage that can't be touched by the shorts. The dam is about to burst. I've been tracking the flow of silver into the new AI data centers being built in Northern Virginia and Texas. These aren't just servers. They are massive consumers of high-conductivity silver alloys. Every H100 GPU from NVIDIA requires a specialized silver-based thermal interface material to prevent it from melting under the load of processing trillions of data points. If NVIDIA can't get silver, the AI revolution stops. If the AI revolution stops, the stock market, which is built entirely on the AI hype, collapses. The entire global economy is now dependent on a metal that is being mined at a deficit and hoarded by the world's most powerful people. This is the end game. They've printed too much money, they've created too much debt, and they've lied about the supply for too long. The laws of physics are finally asserting themselves over the laws of the Federal Reserve. You cannot print a single atom of silver. You cannot mine it if the government shuts the border. You cannot buy it if the billionaire class has already bought the entire year's production. You are standing at the edge of the greatest financial cliff in human history. When the price hits 50, the FOMO will kick in. The people who ignored you for years will suddenly be calling you, asking how to buy silver. By then, the premiums will be $20 an ounce. When it hits 100, the mainstream news will finally start reporting on the silver crisis. By then, there will be no silver left to buy. We are looking at a vertical move, a discontinuity in the price chart where it jumps from 40 to 80 over a weekend. The strategy is simple. Acquire, protect, wait. Don't look at the daily paper price. Look at your ounces. That is the only true measure of your wealth in the era of the real. They will try to shake you out. They will call you a conspiracy theorist. They will say silver is a dead asset. They said the same thing in 2008, right before it went from $9 to $49. This time the fundamentals are 10 times stronger and the dollar is 10 times weaker. The math is broken, the vaults are empty, the war has begun, the price on your screen is a fiction, the volatility is a weapon, the shortage is absolute. We are witnessing the end of the paper paradigm and the violent return of the real. Don't let the banks win. Don't let the sheep drag you down with them. Secure your future while the window is still an inch open. Subscribe if you want to survive the greatest wealth transfer in history. We are entering the era of the real. Don't blink. Keep your eyes on the COMEX registered inventory. It is the heart rate of the dying system. When it hits 0, the music stops forever. And as of 2:33 a.m., that heart rate is flatlining. The red button has been pressed. The $325 billion insider dump is the white flag of a defeated banking cabal. They are desperate, they are cornered, and they are dangerous. The sheep are still worried about interest rate cuts. They are still watching the puppet show in D.C., hanging on every syllable that falls from Jerome Powell's lips like it's some kind of divine prophecy. They have no idea that while they are arguing over a 25 basis point move, the real wealth is being moved into physical metal by the very people telling them to buy the dip in overvalued tech stocks. These institutional giants are using the mainstream media to keep the masses distracted with CPI data and political theater, while they back up the armored trucks to the side doors of the COMEX. Don't be a victim of their psychological warfare. Be a survivor. The math doesn't lie, no matter how much the bankers try to cook the books. We are looking at 820 million ounces of total annual mining supply versus a staggering 1.1 billion ounces of verified industrial and investment demand. You do the math. That is a 280 million ounce hole that cannot be filled by printing more paper contracts. The system is broken. The vaults are empty. The era of the real is here, and it is arriving with a vengeance. This is the most important message I've ever delivered because we are reaching the terminal phase of this manipulation. The insider selling is the smoking gun that proves the exchange is at a breaking point. They are trying to freeze the market because they can no longer control the price through standard wash trading and high-frequency algorithm dumping. This is a bank run on physical silver, and the doors are being locked from the inside. The CME Group isn't raising margins to protect the market. They are raising them to protect the bullion banks that are caught in a massive naked short position they can never hope to cover. If you don't have your metal in your own physical possession right now, you may never get it. The physical disconnect is at an all-time high. The institutional price for a 1,000-ounce good delivery bar is already sitting at $55, while the screen at the bottom of your TV says $32. That gap is a massive pressure cooker. And when it finally blows, it will be a vertical upward move that will shock the world and leave the retail investor holding a bag of worthless paper. Don't let them take your seat at the table. They want you to get scared by the volatility they are manufacturing tonight. They want you to look at a $2 drop on a digital screen and panic sell your physical coins back into the system so they can replenish their depleted reserves. Hold your ground. Hold your metal. We are witnessing the death throes of the fiat paradigm. The greatest wealth transfer in history is unfolding right now, in the dark, in the middle of the night, while the world sleeps under the blanket of institutional lies. But you are awake. You have the delivery manifests, you have the internal memos, you have the truth. The industrial giants like Samsung and Tesla have already realized that silver is the new oil. They are no longer waiting for the COMEX to find the metal. They are signing direct-to-mine offtake agreements that bypass the exchange entirely. This is the end of the transparent market. When the Department of Defense realizes that the silver needed for every Tomahawk missile and every F-35 fighter jet has been cornered by a handful of tech billionaires, they will invoke the Defense Production Act. At that moment, silver will be classified as a strategic war metal, and the window for private acquisition will be welded shut. Now is the time to act. Now is the time to secure what is yours before the limit-up days begin and the exchange goes dark for technical maintenance. Subscribe if you want to keep seeing the truth. We are entering the era of the real. Don't blink. Keep your eyes on the physical, not the screen. The end game is here.